Well, there's no question what's going to be moving the markets today. It is Fed rate hike day. So let's go ahead and dive into what the Fed said and what we anticipate is going to happen because of it. So the Federal Reserve today went ahead and hiked their interest rate 75 basis points to a range of 3.75 to 4%. This was already known by the markets, so that's already baked in. So what we're really looking for is, what did the Fed say today? Jerome Powell, the Fed chair, in his statement and also in the questions he received. So one of the things in the statement that was different than last month is the Fed is saying they might be in their final phase of tightening on the economy or raising their Fed funds rate. We've been anticipating this to happen. The markets, as I spoke about last week, kind of saw an expectation of a Fed pivot in December from a 75 basis points to a 50 basis points rate hike. We'll see if that actually comes to fruition. But also in the remarks, the committee acknowledged the fact that lag is a part of this situation on fighting inflation. Essentially, when the Fed hikes their interest rate, it's going to take a little while for that effect to trickle through the economy and finally fight inflation. That could be 3 months, 6 months. There's no real great indicator on that because the markets are already factoring this in, but we do know there is a lag, and the Fed said that they are going to be taking into account this lag. So hopefully we will start to see the Fed pivot to 50 basis points in December and then potentially hold off or really decrease their next interest rate hike next year. Once they hike a rate, it might be 3 to 6 months until we see it in the economy. And then there's also going to be that 2 months where we don't get the actual report on inflation until the next couple of months after the information has come out. So what does that mean for mortgage interest rates? Same thing we've been saying. We're expecting the economy to continue to cool into the beginning of the year, and then we hope to see a rally in interest rates, hopefully getting mortgage interest rates down to 5%. As far as what this Fed funds rate hike does for your personal credit cards, auto loans, home equities, it's going to raise those, but mortgage rates are not directly tied to this Fed funds rate. So we're hopefully going to start to see mortgage interest rates drop a little bit through the end of the year and then early into next year. I'll also be posting a video on mortgage interest rate temporary buy down options. So that could be a situation that some buyers might want to look at right now before rates do drop. If anybody has any questions, please feel free to reach out to me and follow me on Facebook, YouTube, and Instagram. I hope everyone has a great rest of their day.